Whether you're facing unexpected medical expenses, a job loss, or car repairs, it can be easy to feel overwhelmed, especially when it comes to your finances. Whatever your situation may be, these tips will help streamline your financial planning and manage your budget to help you stay on top of bills, save money, and work toward your financial goals. But before you dive into the video, make sure to subscribe my YouTube channel and press that bell icon. Number 1. Start with a financial review. The first step in managing your financial health during a crisis is knowing where you stand and what may need your attention. That means taking a close look at your total financial picture. Create a financial inventory that includes an up-to-date budget that includes your current income and expenses, current savings totals versus your pre-crisis savings, the amount of debt you currently owe, a list of past due bills, if any, balances for retirement or investment accounts, if any. This can give you a starting point for what to prioritize as you work on your finances. Once your regular expenses are paid, an up-to-date budget will tell you how much money you have to apply to debt repayment or savings. Number 2. Get current on bills. Falling behind on bills isn't ideal, but it can happen in a crisis. If you have bills that are past due, you'll need a plan for catching up. If you haven't reached out to your lenders and service providers yet, that's the next step. Connect with your landlord or mortgage company about what options you have for bringing your account current. The same goes for past due utility accounts, student loans, and credit cards. Often during a crisis, companies offer payment programs for people experiencing financial hardships. Also, consider how your payments may be affected going forward if you took advantage of things like deferment or forbearance periods for student loans, mortgage loans, or car loans. If your loans continue to accrue interest and fees, your payments could end up being higher once you resume making them. You'll need to tweak your budget accordingly. Number 3. Rethink debt repayment. If you come out of a financial crisis with debt in tow, you'll need to give some thought to the best ways to pay it off. Going back to your crisis budget, start by looking at how much money you can earmark toward debt repayment. At the very least, you should have enough money to pay the minimums, but ideally, you can pay more than that. Next, think about ways to make your debt less expensive and more manageable so you can pay it off faster. For example, you may consider refinancing private student loans to lower your interest rate and monthly payments, consolidating federal student loans to streamline your payments, transferring high-interest credit card debt to a card with a 0% annual percentage rate, refinancing a home loan or car loan to get a lower rate in payment. Interest adds up quicker than you think, so reducing interest rates on your credit cards and other debt means more of your payment goes toward the principal each month, therefore helping you pay the debt off faster. Just keep in mind that refinancing or qualifying for a low interest rate balance transfer hinges largely on your credit scores. You can also take another look at your budget to see what expenses, if any, you could reduce or eliminate to free up more money for debt repayment. This includes streaming services, paid apps, gym memberships, and subscriptions. Number 4. Make a savings plan. Once you've got your budget in order and debt repayment plan in place, rebuilding or establishing savings is next on the list. It may seem impossible to save in the middle of a crisis, so if you're not in a place financially where you're ready to save, begin to plan for it. Many people have adjusted their habits during the pandemic. Less shopping, eating out, and entertainment. Look at what lifestyle changes you can continue post-crisis that would help to build your savings. If you had an emergency fund going that you drained, make your goal to get it back to pre-crisis levels. At the same time, consider whether you may want to bump up your rainy day fund in case of future emergencies. For example, if you had 3 months worth of expenses or income saved, you may want to stretch that to 6 or 9 months worth instead. Once you have a fixed dollar amount you need to save, break that down and decide how much you'll save each payday. Then automate your deposits to savings so your money can grow with as little hassle as possible. Most likely it will take some time, especially as effects of the crisis continue, so just focus on taking one step at a time. Number 5. Maximize your liquid savings. Cash accounts, such as checking, savings, and money market account, as well as certificates of deposit and short-term government investment will help you the most in a crisis. This means you can take your money out at any time without incurring a financial loss. Also, unlike retirement accounts, you won't face early withdrawal penalties or incur tax penalties when you withdraw your money. except for CDs, which usually require you to forfeit some of the interest you've earned if you close them early. Don't invest in stocks or other higher-risk investments until you have several months' worth of cash in liquid accounts. How many months' worth of cash do you need? It depends on your financial obligations and risk tolerance. Number 6. Make a budget. If you don't know exactly how much money you have coming in and going out each month, you won't know how much money you need for your emergency fund. And if you aren't keeping a budget, you also have no idea whether you're currently living below your means or overextending yourself. A budget is not apparent. It can't and won't force you to change your behavior, but it is a useful tool that can help you decide if you're happy with where your money is going and where you stand financially. Start by looking at your budget to see where you might currently be spending more money than necessary. For example, are you paying a monthly fee for your checking account? Explore how to switch to a bank that offers free checking. Are you paying $40 a month for a landline you rarely use? Learn how you might cancel it or switch to a lower-rate emergency-only plan. You might find ways you can start cutting your costs now just to save money. Maybe you're in the habit of letting the heater or air conditioner run when you're not home or leaving lights on in rooms you are not using them. You may be able to trim your utility bills. Now might also be a good time to shop around for lower insurance rates and find out if you can cancel certain types of insurance, such as car insurance, in the event of an emergency. Some insurance companies might give you an extension, so look for the steps involved and be prepared. Number 7. Closely manage your bills. There's no reason to waste money on late fees or finance charges, yet families do it all the time. During a job loss crisis, you should be extra studious in this area. Simply being organized can save you a lot of money when it comes to your monthly bills. One late credit card payment per month could set you back $300 over the course of a year. It could even get your card canceled at a time when you might need it as a last resort. Set a date twice a month to review all your accounts, so you don't miss any due dates. Schedule electronic payments or mail checks so that your payment arrives several days before it's due. When your list is complete, you can use it to make sure you're on top of all your accounts and to see if there are any you can combine or close. Number 8. Get a better credit card deal. If you're currently carrying a balance, it could really help you to transfer that balance to another card with a lower rate. Paying less interest means that you can pay off your total debt faster and/or gain some breathing room in your monthly budget. Just make sure that what you save from the lower interest rate is greater than the balance transfer fee. It's also worth asking if your current credit card company will lower your monthly interest rate. Sometimes companies will do this to keep you as a customer. It's cheaper for them to keep an existing customer than it is to recruit a new one. Number 9. Check your insurance coverage. In Step 3, we recommended shopping around for lower insurance rates. If you're carrying too much insurance or could be getting the same coverage from another provider for a better price, these are obvious changes you can make to lower your monthly bills. That being said, having excellent insurance coverage can prevent one crisis from piling on top of another. It's also worth making sure that you have the coverage you really need and not just a bare minimum. This applies to policies you already have, as well as to policies you may need to purchase. A disability insurance policy can be indispensable if you sustain a significant illness or an injury that prevents you from working, and an umbrella policy can provide coverage where your other policies fall short. Number 10. Keep up with routine maintenance. If you keep the components of your car, home, and physical health in top condition, you can catch problems while they're small and avoid expensive repairs and medical bills later. It's cheaper to have a cavity filled than to get a root canal, easier to replace a couple of pieces of wood than to have your house tented for termites, and better to eat healthy and exercise than end up needing expensive treatments for diabetes or heart disease. You might think you don't have the time or money to deal with these things on a regular basis, but they can create much larger disruptions of your time and finances if you ignore them. Improving your financial health can take time. Recovering from a financial crisis isn't something that happens overnight. It may take several months or even longer for your finances to start getting back to normal. During that time, patience and consistency can be your best friends. As you work toward positive financial health, this wraps up the video. Don't forget to subscribe my YouTube channel and press that bell icon. I will soon meet you with another informative video.